Sam here, and I'll be doing the premium video for Friday, May 30th, 2025. So another week is in the books, another month is in the books. Monday will be June, somehow. So always a good idea, I think, to do a deep dive these weekends. Even if you don't do a deep dive every weekend, I do, but go a little bit deeper when months roll over, just because you'll get a monthly candle, you get a weekly candle, lots of changes, so all that stuff's very important, in my opinion. For those of you in the room, the main room, I'll share my weekend notes with you on Monday. So we'll do a deep dive this weekend, see what we see, but let's do a little bit of a preview of that in this video. We'll do it a little bit faster, and let's just see what's setting up here. So we'll start where we always start, which is the indexes, and then we'll kind of look around the corners of the market to see if there's any risk hiding in any of those corners that might not be evident in the index. So let's start here with SPY, as we usually do. And with SPY, just an inside week, right? You had the big up week there, big gap up, and at least for the last 2 weeks, all you've really done is just trade inside that week. You can see there that if you draw the high to the low on the gap up week, the last 2 weeks have just been inside bars. So I don't really expect too much here to change from what we talked about last Friday. Last Friday, most things looked bullish. There was one thing that was a little off, which was the VVIX, the VIX of the VIX. But that ended up, well, it ended up both playing out and not playing out. You got a lot of volatility this week, but at the end of the day, it didn't really go anywhere. So if we look at the indicators here, the weekly chart, this is still just neutral on my indicators. A large part of that is because the structure of the moving averages isn't totally correct. So that's kind of giving it a little bit of a knock, as well as this is not correct as well. So that can improve, but at least for now it's a neutral chart. And then on the daily chart, it's a little bit of an upgrade. It's neutral up. So you'll get a big upgrade if you can positively cross this indicator, which has not yet crossed. Keep in mind, though, that when you're looking at this indicator, if it says no trend here on the label, what do? Train your eye to look at the lower indicator. And that's the direction you should trade in. So if the upper indicator, which is the more important one, everybody likes the arrows, but this indicator here, the trend oscillator, is actually the more important one. If this ever says no trend, just train your eyes to look below. If you see thrust aligned, trade in that direction. So for now, everything looks slightly good. I mean, today certainly could have been a significantly worse day. The market got hit pre-market because of the tweet, and then it got hit midday, and I'm not even sure what hit at midday, but it rallied back like a champ. It really did. It really did. So we'll see how things shape up going into next month. I have a theory that I'm going to work on with you guys here in this video. And the theory is that we'll start to see some of the more boring stuff play better next week. So things like staples and utilities, really the boring stuff that hasn't moved. And I think that's really good, just goes back to the bond market. So we'll spend a little bit of time there on the bond market, because if that has any merit, then we'll start to see a little bit of rotation next week. Not the easiest thing to call for, because basically the market has only really wanted tech, but we'll see if the bond market here supports that. So on the Qs here, you are better, right? On the SPY, it was a neutral. This is neutral up, so that is a better score. And then you're also neutral up here as well on the daily chart. Same exact thing, no real difference other than the Qs are a better setup. No trend, what do? You look below, trade in that direction until that changes. So I don't see anything there worth really making any huge updates on from the last video that we did on Friday. Let's go to the DIA. We'll just do this one super quick. This one actually closed green, pretty impressive. And it got an arrow today, which is a very necessary thing. So this was one of the worst ones we've looked at. Still trading below the daily 200 here, but this arrow is going to go a long way. So we'll see if this arrow here is enough to drive it back higher. That was absolutely necessary, and it did the thing. So I don't have a ton of interest in the Dow, but just from market-wide positive sentiment, I think that daily arrow there that you're seeing is a good thing. Let's go to the IWM, and I have even less of an interest in IWM. Now, here's kind of the kicker with it is if the bond story is true, there is a positive effect on the IWM, but I still just really can't get behind this chart. So we'll cover that a little bit more when we get to bonds. But for now, this is just an inferior chart to what we've seen. This is neutral with a negative score. The other ones were positive. This is just neutral here. The rest of them were neutral up with higher scores. All markets, well, the SPY and the Qs are above their 200. The DIA is at its 200, and this one is $10 below its 200. So is there a catch-up play here? Maybe. Am I really overly interested in playing it? Not at all. I'll let somebody else trade that one, and I'll continue to trade the SPX. So that's the indexes. Let's jump over to bonds, but we'll do it with HYG first, and then we'll actually check out ZB and whatnot. So HYG here remains in a more bullish orientation than not. This hasn't done anything, but it doesn't necessarily need to. So as long as this is above 78, I think this keeps gentle bullish pressure on the market. If it gets above 80 at any point, then I think the bullish pressure becomes more intense. So everything that happens here between 78 and 80 is not overly relevant to me. I think that as long as it's above 78, I would view the indexes, I would skew them bullishly. I would skew them very bullishly above 80, and I would skew them bearishly below 78. So trading 79.5, that's pretty damn close to 80, so we'll see if they can get it next week. So this is a +1 for the bulls. Not an enthusiastic one, right? Because the chart is just neutral, but it's good enough that it skews towards the bulls. So this is a +1 for the bulls going into next week. Let's check out bonds, and we'll do it with ZB. And so last week I shared a theory that I thought bonds had made a low in the Friday video, and I showed you what to look for, and I'll show you again just for those of you that missed the video. So there's 3 things that you want to look at because this chart sucks, right? Like last week it was a -100. It has improved a little bit. Now it's only a -85. but there's 3 things that I would look for, and you have to have a really bad chart, right? Like I could probably even show you an example on UNH, but let's just use this one for now. Here you have a very bad chart. Last week it was a -100, as bad as it gets. I shared in the Friday video with you last week that I thought this was making a tradable low. So how has this, how has this done so far? Well, I would say that's a pretty decent weekly candle there, right? It's it's not a fully engulfing candle, but it definitely engulfs most of last week's action, at least the open and the close, maybe not the high. But that is a bullish candle. But here's the 3 things I look for. 1, you undercut a previous low. So this line here, the one that's drawn in already, the light blue line, that's that low from there, right before you went up. So that's a significant low. Stretch it across. That's the same line here. And you see how you undercut it, right? So you undercut the low, point 1. Point 2, you undercut the low. You do so on high volume. In this case, almost twice the average volume. That's point 2, high volume. And then number 3, you do it with a reversal candle. And that is a reversal candle there, right? You probe the low, you put in a wick, you close back above the low, and you close at the high of that day. So 3 points, breaking a low, high volume, reversal candle. If you get those 3 things, and those 3 things happen on that one candle right there, that is a good signal to change the trend. Now, I'm not saying that this is going to go like this, although at some point I think it will. Maybe not soon. But I am saying maybe this could, come up here and potentially tickle, this zone here, which is where the daily 200 meets this previous swing high, right? So maybe give me between the dash line, which is the anchored VWAP. So I'm kind of looking for something to move into this zone here. So far, I mean, the chart still sucks. I mean, it's a negative 85, but it has improved, and it is doing exactly what you would want to see if you think there's going to be a reversal, right? So this cuts both ways. I would have a level on your chart, and you don't have to monitor it. Just put an alert so that it triggers you if the ZB gets below 110.14, right? Because at that point, the whole idea is a bust. This whole pattern breaks down, and interest rates go to a million, right? Which is probably a bad thing for stocks. As long as this level continues to hold, I would actually look for continuation to the upside here. So I know that you guys are trading TLT in the room. I saw Bruce bought some today. And let's just take a look here at TLT. I mean, it's a start. Let's put it that way. So here's really why I wanted to look at this, because does this help me trade stocks? Maybe a little bit. Really, HYG is what helps me trade stocks more reliably than something like TLT or ZB. Because you can have stocks go up with interest rates going up, although it's less good. And you can have stocks going down with interest rates going down. So the interest rate alone doesn't necessarily help me trade it, but if it is starting to make a low, and so far we're 1 week into that call, and so far it is doing what it needs to do, then I'm looking for rotation into things like this. So this is XLP. We have some of this in the room together. I was thinking about buying Walmart. I'm just going to quickly show you XLP here, and then I'm going to flash to Walmart because I actually think it's a better buy. So we already have an XLP position in the room. We're in the $80 calls for June. And those finally went green today on this move. I think that you're starting to see a breakout here, right? I think this is kind of a inverse kind of head and shoulders thing breaking out. So I like that, and I also like the weekly squeeze on it. So if next week we start to see a little bit of love for the old man stocks like the XLPs, the utilities, the boring stuff, if we start to see a little bit of love for that stuff, I really like this setup. One thing I was considering, which I didn't do today, but I would consider it as soon as Monday, is actually taking all of my XLP calls and exchanging them for Walmart calls. So basically sell my XLP, buy Walmart with equal size. So Walmart here actually is also an XLP. So they're not dissimilar, right? Basically they're the same idea. It's just which one looks better. And I would argue that Walmart actually looks better, right? The indicator would also imply that. And Walmart has a very nice breakout pattern here with an arrow today. So something to consider, at least for us in the room, is maybe we get out of XLP and roll into Walmart, but I'll let that be a decision for Monday. But for those of you that don't have a position here in any of these, I would strongly get you to take a look at Walmart, because this is a very nice little setup here, and I really like the pattern. This is a kind of a nice breakout potential pattern there. So that's all fine and good. The other one would be something like XLU, which is actually the strongest weekly chart I have for any sector. If you look there on the left, top left, you can see the score is 100%, which I'm led to believe is a good score. And the weekly chart here is a doll, or excuse me, the weekly squeeze is a doll. So I like that a lot. And I think that you can come up here and potentially make a new high on something like XLU. So are these very exciting ideas? No, but hopefully you can follow the thought process that if indeed the bonds did make a tradable low, that this kind of boring stuff will benefit from that. So there's that. Now I do have quite a few things here that I could cover. I'll probably wait to do that with you guys live in the room, but I do want to show you one setup here that I think is pretty good. I'll show you two. So we bought some of this today. Kind of well timed, I suppose. We bought it like 20 minutes before the close, and then the last 10 minutes it just kind of spiked up. So bought a little PLTR here. I think this is a good looking chart. The close today put an arrow on the board for the indicator, which was super necessary. The pattern is actually based off the 4-hour squeeze, and to me this looks like a flagging pattern into a rising cloud. You see how the cloud is rising there? Kind of looks like a flagging pattern into a rising 21 with a high volume breakout today and an arrow. So did buy some of this today. We did the 135, 150, 165 butterflies for June monthly, and those are doing okay. Just to close out the thought on crowd, I talked to you guys about crowd last week. This was the best setup that I had on the board, and you can see here what it did this week was just kind of a monster week. I'm a little sad looking at the price here because I had the 470 butterflies 20 wide. I got in for 380 and we got out at like 850. So more than a double, which, is not bad. But had I held them, they would have gone out at $19. So it would have been basically from 380 to 19. I probably could have taken a week off had I managed to hold. But I would keep this one on your board. Earnings coming up. And if it dips on earnings, let's say we get a flash sell into 440, I'd be an instant buyer of that. I don't know how actionable the setup is exactly here. So let me go to one that I think is a little bit more actionable. And it's going to be DoorDash off of the weekly chart. We've all been collectively waiting to buy this, and it just has not pulled in, including today. So the weekly here, the weekly squeeze is just, that's as good as it gets. Like, I love a flat squeeze with a little bit of a tail to the upside. You got arrows for days, a 92% score. So just wanted to give you guys a couple of picks there in terms of things that I think look pretty solid going into next week. I'll verbally just tell you the list here, and then you can check them out on your own. But I have HIMS, HIMS, XLP, Meta, Palantir, Dash, Walmart, Spotify, TRV, Travelers, and Netflix. I'm sure I'll have more, but those are the ones that I have as of today that I'll be looking to do something over this weekend. So with that, let's move into the VIX, and then we'll close out the video. Now, if you are watching us on the YouTube, before you go somewhere else on the YouTube, and before the video ends, drop us a like, drop us a comment. It does help us out with the algorithm, and I would certainly appreciate it. My mom judges me on how many likes the video gets, so if the video doesn't get enough likes, she won't cook me dinner. I'm actually kidding. My mom hasn't cooked me dinner in 20 years. So VIX here, nothing really, no signs of life really. You got this little burst up, but there's really not a lot here. I would start to get a little bit more cautious once this goes into a squeeze, but we're not there yet, and the weekly chart still has room to the downside. So I'm not seeing any real issues there. Similar to last week, where I saw issues was in the VVIX last week, potentially, and those have been smacked. Those have been smacked. So the VVIX here looks kind of chill, which is good. So let's kind of put all the pieces together here. So we looked at the indexes. The indexes skew bullish. The ranking is Q's first, SPY second, DIA third, IWM as usual fourth and last. We then looked at HYG, which is an incredibly important part of what we do, and I gave you the levels that I'm looking at, which is 78 and 80. As long as it's above 78, it's bullish. The closer it gets to 78, the less bullish. The closer it gets to 80, the more bullish. If it gets above 80, that's very bullish. And it's trading like 79.5, so that definitely leans bullish. So that works in line with what we're seeing in the indexes. The bonds themselves, like ZB, is continuing to make the low pattern that we identified last week, which I think will help just in general. I think interest rate fears are certainly a thing, and if those can just at least chill out, I think that will help stocks. So that's helping stocks. We looked at the VIX products, and I don't see any major issues here at all. So that's neutral. So I would say that doesn't hurt the bullish case. So yeah, from what I'm seeing here, everything still continues to lean gently bullish. There's some really good setups out there. There's a lot of 4-hour squeezes, which I'll be doing a deep dive into this weekend, and I'll share with you guys in the room on Monday. But yeah, everything looks good, and let's see if we can get a little bit of rotation back into the old man stuff. I got a quite a large book of it, so I'd love to see a little bit of love for the utilities, the staples, and the telecoms of the world. So we'll see how that plays out. Alright guys, well that is my time. Hope the video was helpful to you as always. Again, if you're watching us on the YouTube, drop us a like, drop us a comment, even if it is just to tell us what you're having for dinner, what are you having to drink. I'm going to make myself a ribeye and a mineral water. So that's going to be my evening, and I'm highly looking forward to it. So let us know what you're thinking. If you're seeing the market different, let us know in the comments as well. And I will see you guys in the video next Friday. Have a great weekend. Cheers.